the informed investor. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Let's hear what's making real estate news. The best man to talk to is Charles Tarbey, the chairman of Century 21 Australasia. Charles, evening to you.
Good evening, Steve. Yeah, not as exciting as it was last year, but it's still okay.
Yeah, well, I spent a bit of time on the weekend, both Saturday and Sunday, around the areas of Alexandria, Kensington and Green Square. Boy, has that place changed. Have they put some apartments in there?
Yeah, all the way down through there and then a crossover to the other side down towards Mascot and those areas. It's a lot of properties that when you consider it was a factory area, and the big thing many years ago was buying those as factories and converting them into like apartments. But now they're all gone. They've gone 30, 40 stories up.
Overdone it?
I think so in many of the areas. I wonder what it's like in a climate like now with winter. You wonder what the wind's like down through there, the sunshine that used to be through there. It doesn't come into some of those areas. The transient population that might be there, the proximity to the airport. I think it's very, very crowded, but it's not over. There's still so much of that area that's not developed yet.
Well, they're still going up, and I mean you can see it though when I was stuck in a little bit of traffic there, and you can see proximity to the CBD of Sydney, proximity, as you mentioned just there, to the airport. You've got public transport. You've got a train, so. It's got all of the things that you would say that you would need to tick off on when you're going to buy an apartment. The thing I would say that it hasn't got is much charm because they've jammed so many in there.
Look, I'm always biased with these apartments because I live in the Lower Blue Mountains, and it's pretty hard to get a feel for wanting to live in the city. I had an apartment in there and I didn't like it after a while, and I sold the property, and I'd just rather drive home, even though it could be 50 minutes drive. In non-peak, I'd rather drive home, but some people, it's a good lifestyle. They get in there, they don't have to do any cleaning, any gardening. They get themselves a nice little one-bedroom place, work in the city, save some money, and off it goes. From a lifestyle perspective, it's certainly not something that I would favour.
And all of our biggest cities, capitals, Brisbane, Melbourne, would have similar places. I mean, I've never been much of a fan, I must say, of Docklands. That always, to me, seems like, as you mentioned, they're windy and cold and pretty not particularly attractive. I imagine Brisbane's got a similar area, has it?
It has, but going back to Docklands, I rented an apartment there about a dozen years ago, and I bought a business in Melbourne, and so my team were in and out of Melbourne, and there was nothing there. I mean, you could cut across the casino, but the lifestyle wasn't there. There certainly weren't the restaurants and the cafe scene. I don't know whether it's changed much since then, but it really wasn't a very appealing lifestyle.
It hasn't really, and I suspect what's going to happen, there is an area south and a little west of Docklands called Fisherman's Bend, which was always famous for having the Holden engine plant. The state government of Victoria is intending to develop that Fisherman's Bend area. I suspect Fisherman's Bend, Melbourne, is going to turn into the Mascot Green Square of Melbourne compared to the Sydney. That Sydney development's going to be replicated there, I suspect.
Yeah, and again, Green Squares, they put the railway station in there, and that made a hell of a difference. But you're right. I mean, that area is an industrial or past industrial area, and it still looks like it. It is, and you've got the bridge around you. But there is water there. If they develop it nicely and they put it in the right spot, you could get at least some nice views and a nice feel of open space. But if it goes like Docklands or down in Green Square, Alexandria, there's not much of a view there, Steve.
What was the clearance rates like at the weekend? Any change?
Yeah, look, they were up slightly across the country, 56.7% compared to 66.5% this time last year. Melbourne did okay. It had a 62.3% clearance rate with 946 auctions. But the best one, of course, even though it didn't do better than this time last year, was Adelaide. Adelaide came in at 68, only 68.5 this time last year. And we've talked about the run Adelaide's having, and that just continues. 68% is fantastic clearance rate. And I know that Perth and Brisbane did better than this time last year, albeit in the 40s. But the city of Adelaide is just proving to be very, very different than the rest of the market when it comes to clearance rates at auction.
I'd like to know who's buying there. I really would. It's a fascinating social question to answer because, everybody keeps bagging Adelaide, saying that there's no work there, that manufacturing jobs have disappeared. But I suspect what people are discovering, and you've been talking about it for some time, is the lifestyle choice that you make. When you take a young family to somewhere like Adelaide, if you can get a job, you are getting a lot more bang for your buck when you buy a house. There's still plenty of houses on quarter-acre blocks, and you've got good education. You've got good health care, and it's a great place to raise a family.
There's been good, strong immigration coming into there. You notice it through, I know this sounds silly, Steve, but you notice it through the small businesses and the taxi cabs. You notice the changing of the guard when it comes to different cultures running those businesses or driving those cabs, and they're coming through. And I think that's giving Adelaide a little bit more strength and a bit more support in terms of growth, because it has been a state that has had negative migration, and of course with industry coming and going there quite strongly, it hasn't had the best run. But from a property perspective, because of its distribution area, the way in which it's laid out, the amount of property that has been available for some time, it's been a very steady marketplace compared to the rest of the country.
Yeah, the defence industry that they're ploughing in there might help too. BIS Oxford Economics say, look, we reckon house prices are going to stay pretty flat for the next financial year.
I don't disagree, and I don't think that the encouraging part there is flat, because everybody was talking 6 months ago, or even just probably 6 weeks ago, the crash, the bubble. And now people are talking about flattening out, and that's a good indication of what's really happening. And those people that are out there trying to generate a negative view of the property industry haven't had their way. They certainly have been talking about it for a while, but they just haven't had their way. And with low interest rates, honestly, it's not much is going to change. And I think the Reserve Bank is encouraged to keep interest rates on hold for some time.
And if you're selling and buying in the same market, it suits you anyway.
It absolutely does, especially if you're selling it at one price and buying at a higher price. It certainly does suit you. So I think it's the best marketplace to be in. Steve, this is what real estate's all about. A bit tougher, negotiating harder, properties on the market longer. I think that's what real estate really is. And the sooner people get used to it,
exactly,
the better we'll have in terms of a steady industry.
Good on you, Charles. Talk to you next week.
Thank you very much.
Charles Tarbey from Century 21.
A smarter SMSF solution is BillDirect. Invest and view your trading and super admin all in one place. Plus, BillDirect takes care of the paperwork, compliance, tax and auditing. They're different, with online data reporting, a mobile app and concierge service, so you can talk to a SMSF expert every step of the way. Set up your SMSF with BillDirect by June 30 and save $1,455 in your first year. Visit BillDirect.
Before investing, consider your financial situation, needs and investment objectives. Terms and conditions at belldirect.com.au, AFSL 314341. AFSL 3